Hi there, welcome to Nepi Invest and welcome to Financial Year 25. We have about 30 minutes left in trading today on the first day of the financial year, 16 minutes until 4 p.m. And if you are heavily invested in tech companies, you've had a bad day because just looking at all tech, down 2%. However, resources up 0.92%. The agenda for today's video, fairly similar than other videos. I'll have a look and touch upon a comment that was released on my portfolio performance video that released on the last day of the financial year, just for clarification reasons. Then we'll have a look at the ASX today, looking at the best and worst performing sectors, indices, and also companies. And then we'll have top five announcements of the day. Almost completely forgot. I do have a top five, and the top five announcements are full of small companies. In fact, two companies I have never heard of before. In fact, both of these companies have come in at number one and number two. And then we'll have a look at some charts. I'll just touch upon a few other companies as well, but I won't go into too much detail. And then we'll have a look at some charts, including Guzmán y Gomez. Share price of that company is down again. I heard someone say if the share price gets down to $25, I will buy some shares. This was from an expert, and share price I think is getting towards $25. So if they do that and buy some shares, that remains to be seen. Maybe they just said it for some reason. Anyway, let's have a look at the comment I just want to touch upon. So this was a comment from Michael Jordan or Georgia Verdigi. Hi, Nepi. Looks like you've excluded your cash component, which is about 15% based on your previous video. And as I mentioned, because I actually have responded to this, cash is in my other assets. So I have my equity assets in these three portfolios. And then also have a few other assets that are not equity assets. Some are equity assets, but they're in overseas currencies. I also have crypto and cash. Now, the total of these other assets, based off my percentage holdings in those three portfolios, which was 34% in my quality, 26% in the small caps, and 26% in the technical analysis portfolio. So if you add all that up, you get about 86%. So I had a look, and my cash component is roughly about 12%. Now, my cash component can go up or down, but I want it to be around 10% for the long term. The reason I want it to be about 10% is just so I have some flexibility, particularly if something exciting pops up onto my radar and I want to buy that opportunity. So I always have about 10% in cash, and that's in my other assets. If I looked at the performance of all my assets combined, which actually I started to do, if I looked at the returns of all my assets, it would be about 26 to 30%. So I haven't actually calculated yet, but definitely between 26 and 30%, which actually is a good year. I'm always going to accept 26 to 30% return in 1 year. And I have been getting reports from some fund managers and some other investors that their returns were roughly in the same range, and a few other fund managers significantly lower than 26 to 30%. Now, but this is just 1 year. You can't really determine the, I'm going to say the philosophy or the strategy of fund managers just based off 1 year. It's one of the mistakes a lot of investors do when they do invest, or superannuation holders do, is when they look or have their money in a super and it underperforms 1 year, they take the money out and then put into a superannuation fund that actually outperformed. And then the reverse happens. That super fund that underperformed the previous year then outperforms. I have seen people do this. It's not always the best strategy, because those companies that did really well in the past year might not do so well in the next year. And in fact, some people have a strategy where they look at the worst performing companies in 1 year and actually buy some of those companies for the next year, in the belief that reverting to the mean actually happens for most companies. So those companies that perform bad 1 year will perform well the next year. Those companies who perform well 1 year will perform badly next year. I don't absolutely believe that because some companies perform well year after year after year. Yes, I'm looking at you, Pro Medicus. Just notice here, someone said SKS is on a run, and it sure is on a run. In fact, I'm going to have a look at chart for SKS Technologies. Okay, so that's that comment. Yes, do have about 12% in cash right now, and it can rise and fall depending on my mood and depending on opportunities pop up. Anyway, let's have a look at the ASX today. We've already scanned or talked about tech, and did I mention small caps? Small caps is down a little bit and mining up, but let's have a look at the sectors and indices. And not only did mining companies have a good day today, real estate, which is sort of a sign that people expect interest rates to fall because real estate and interest rates are inversely correlated. If interest are going down, real estate should go up. If interest rates are going up, real estate should go down. So there is inverse relationship between real estate and interest rates. Energy's had a good day. And look at IT, way down the bottom at at negative 2.35%. Healthcare's had a bad day as well. Telecommunications and even staples, which doesn't make sense. So if real estate's had a good day, you'd think there should be some correlation with real estate and oh no, probably not. Maybe not. I don't know. Maybe I'm talking out of my ass. I have no idea. I thought there would be some correlation between real estate and staples. Staples is more defensive. I don't think real estate could be absolutely defined as defensive. Okay, so let's have a look at the indices. Gold is down. So even though mining's had a good day, gold's down. There you go. Just shows you that gold is completely different than mining, even though it is mining. When you look at a lot of the times when you look at the performance of the material sector, it's not necessarily meaning that gold's had a good day. Small caps bad, banks had a bad day as well, and yeah, ASX 200 resources up, and ASX 20 flat, which probably means let's have a look at the best performing and worst performing in the ASX 20. I'm going to say nine up, 11 down. No, 9 up, 10 down, 1 flat. Well, way off. 7 up, 13 down. And I am assuming, we'll say, I have no idea if iron ore did well, but I'm assuming BHP, Rio Tinto, Fortescue, and Goodman Group are the best performing companies today. WiseTech is the worst performing. Let's have a look if I am right. Starting with the best, Rio, BHP, Fortescue, Goodman Group is there, but it's coming in number 6. Just behind Aristocrat and for some reason ANZ Group, which is up when the other banks are down. And we also have Woodside Energy, of course. Of course, Energy had a good day as well. So, yeah, and WiseTech. Yeah, there is. WiseTech REA Group down a lot. And I have noticed that a lot of tech companies are down big today on the first trading day of the new financial year. For yes, some reason, tech's nervous. Well, people investing in tech are really nervous. And it's interesting because I am listening to a podcast about the stock market crash in 1929. And it is interesting listening to that. I don't think we're in a tech bubble at all, nowhere near that. And one of the reasons I say we're not in tech bubble, is because of margin call or margins. Don't think a lot of people are taking advantage of margins. That's one of the main reasons, based off a little bit of research I've done, one of the main reasons the market crashed in 1929. There was so much money with margins, and we started to see margin getting called on Black Thursday, whatever day that was, October 14, 1929. And I have actually heard that someone, I forget who, but this one particular commentator, they look at how many margins, what percentage of investments are in margins, that sort of thing. And a few years ago, they said we're not at a bubble because margins are that high. And I was thinking about that today when I was listening to the podcast, and it made sense why the market would absolutely collapse if so much money is in margins. Because if market starts going down and investors start getting margin calls, they have to sell stocks, which can lead to sort of a cascading effect where we just see more and more selling because of margins and margins call. So if you have any sort of interest in market collapses, have a read and do some research on the Great Depression. and what led to the Great Depression. That was the market collapsing in 1929, and the relationship between margins and market collapses. So I don't think right now we do have a lot of margins. I don't think it's excessive. And I have a feeling in 2007 into 2008, there was excessive margins as well, because there was a massive bull market from 2003 to about, or even starting earlier, to 2007, 2008. And margins were quite popular at that point in time. I don't think margins are that popular. So, bit of a sidetrack right now, but WiseTech, REA Group, the worst performing companies in the ASX 20, and that's to be understandable because tech's had a bit of a problem day today. Okay, let's have a look at the best and worst performing companies and start with the top gainers. And funny enough, companies, the best performing companies by percentage change, Wellard and Infinity Resources, a company I've never heard of before, are up over 100% today. I'm pretty sure I will be able to speak quite fluently soon. I don't know why I'm having trouble to finding it hard to speak right now. But anyway, Wellard and Infinity Resources up by over 100%. And both of these companies are in the top two, number one and number three. And the company that's coming in number five by percentage change, Lindian Resources, is in number two. So three of the companies on this list are in my top five announcements of the day. And two of these companies I've never heard of before. So hopefully quite a few companies that you own are in this list. Let's have a look by market cap. So quite a few mining companies, as you would expect, including Metro Mining. And then we have Acton and Medical again. I'm going to have a look at that chart. Seems like I have a look at that chart every single day. Seems like every single day that company is up even more. Good turnover as well. And I wouldn't be surprised to see that company being a bit of a favoured company among day traders. A few other interesting companies here as well. Titomic, Bigtincan, although that share price is still in a well-defined downtrend. And yeah, and Metro Mining. Have a look at chart for Metro Mining. It's a nice, actually, looking chart for that company. Now let's have a look at the worst performing companies. And I have a feeling there's going to be some ETFs when we look at the market cap, because I'm pretty sure ETFs went ex-dividend today. I could be mistaken, but there was a lot of announcements in regards to that. And I can confirm that right now. When I say a lot of announcements, for some reason, of course, CommSec takes ages and it's not going to play ball. The first announcement was not released at 8:28 or 8:32. Yep, stop playing ball. CommSec just says, nah. But now there we go. Yeah, the final distribution announcement. So I have a feeling there was a lot of these announcements today. Now they are doubling up because CommSec does that. You can just see just ridiculous amount of announcements. So if you just open one of these up, I have a feeling they went ex-dividend, and you can, well, maybe not all of them, but some of them definitely went ex-dividend. Let's have a look. Distributions. Ex-dividend date, 1st of July. And I think we are going to see quite a few of the worst performing companies by market will actually be ETFs. Hopefully that's true, because I might be completely wrong. Okay, so let's have a look at the worst performing companies. Copper Search, don't care. Strike Energy's had a bad day. I'm going to put that down because I have no idea why, but their turnover is large. So I might have missed something with Strike Energy. In fact, let's have a look at that right now. Strike Energy is down big because of an announcement called West Erregulla CSBP GSA update. I know nothing about that company, this particular update. Market doesn't like it. So what I would do is I'll have a look at the chart at the end of the video for Strike Energy. I have a feeling it's a pretty bad looking chart right now. Otherwise, Synlait Milk chart is horrendous. No reason to be invested in that. And there's Maggie Beer, which I did mention in a video last week because they did release a trading update, and it looks like maybe a bit of a delay reaction there, or could be it's on low turnover, so probably not delay reaction, just noise. Let's have a look by markup, and hopefully we have a lot of ETFs. Guzmani Gomez down 8.7%, so $25. And then we have the ETFs, the Moat ETF, another ETF, Next Gen Energy. Pretty sure that's uranium, a managed fund that probably is ex-dividend. Botanics, I'm going to look at Botanix chart. Because that share price has pulled back. Select Harvest, Weebit Nano, which is tech, Unprofitable Tech's probably had a bad day today. Bladeside Studios, bad. Doug, bad. So a lot of, I wouldn't call Doug Technology a tech company. It's got technology in the name. Integrated Research, a bad day today. That's okay. Profit taking there. Not as many or ETFs, but there is a few ETFs here. And yeah, a few mining companies as well. But so it's pretty crappy when mining's had a good day and the mining companies you own are down. That would be awful. Okay, so let's have a look at the top 5 announcements of the day. I might just discuss the companies that did not quite make it. So MA Offshore announced today that one of the largest shareholders is willing to accept the takeover bid, something like that anyway. MRM. I was going to do these fairly quickly. What was it? Major shareholder supports received for scheme received. You've used the word received twice in that particular sentence or that particular title. That's not good. A company called Clydes Resources has gone into administration. That's not a good sign for shareholders, but it's not necessarily the end for the company. Have a look at the chart for this company, and just based off the chart, why would you have been invested? That would be my first question, because the chart looks absolutely horrendous. So the question goes, why would you be invested in this company? So that's another benefit for technical analysis. It keeps you from these type of companies that go into administration. And a lot of the companies that do go into administration, the share price is in a downtrend. It keeps you from buying these companies. We'll say buying and holding these companies. So that's Clydes. Cobram Estates released a bit of an update, like a production update, completion of Australian harvest and business update. Share price down a little bit, but nothing significant in that. A company called Wellnex Life released a market update, trading update. I was thinking of maybe talking about this company, but they released a trading update on the 13th of June. So that was 2 weeks ago. So they released 2 trading updates in 2 months, and there was nothing new in this particular trading update. And then I had a look at the chart, and the chart for Wellnex didn't fill me with much goodness. So no goodness. Share price is going sideways. So consolidating period right now for Wellnex, but yeah, whatever. And EPX, EP&T Global also released a market update, but you can see no trading. There has not been one single trade for this company. So obviously this market update was received by the market with a bunch of ho-hum. Whatever. That was their opinion about EP&T Global. And I just noticed when I looked at this, updated, that Prophecy, a company I do own, signs federal government customer with Optus. Share price has gone a little bit of a rally for Prophecy. And I'll just quickly look at the chart for this company. If they released a little bit earlier, this could have made it to my top 5, maybe. And this is a chart for Prophecy. It's a nice looking chart for Prophecy. Yeah. And there's the breakout. Nice little breakout in March. Okay, so let's get to the top 5 announcements of the day. We'll start with 5. A company called Harvest Technology Group. No, it's not FTG, Michael. It is HTG, Harvest Technology Group. Share price down 10.53%. However, it's on a low base. You get the share price falling by 1 pip and it's down 5%. Or if it goes up 1 pip, it's up 10%. So I wouldn't take much notice of the share price down 10.5%. You just see buyers and sellers. There's not many at all. I'd say this company is liquidly traded, although volume today has been 2.2 million, 35,000 shares traded. And the company did release a sort of an interesting announcement. Harvest Technology unveils 3-year profitability plan. I actually do like these sort of announcements. Give me your plans moving forward. Now, I did have a look at this announcement. I went, this could be interesting. And of course, CommSec's going to take 5 years to open this announcement up for no reason other than it's just slow. And I think Commonwealth Bank should look at their systems, because there is no reason why this particular announcement should be taking 5 years to open up. I have fiber to the premises, and all the other websites open this particular announcement up in split second. It's a split second. Anyway, I like when management releases these sort of goals, these sort of ambitions, because it says they have the long term in mind. And I'd probably say that a lot of founder led companies would do this sort of thing. Maybe they keep it in house, but if they do keep it in house, I just wish they would share it because I think this is really good practice to give us the shareholders and the market your goals for the future. So, 3 year strategic plan to achieve profitability by financial year 27. That's still a long way away. So, we are talking about 3 years away. And what I found interesting, so accelerate annual revenue from existing NodeStream product range to exceed 7.5 million by financial year 27. They do have, here it is, a projected revenue, $5 million in financial year 25, 7.5 million in 26, $10 million of revenue in financial year 27, achieving profitability. That might seem nice growth, doubling in 2 years, but it's on a really low base. So yeah, I looked at that. I went, this company is still really small, and if they can achieve profitability, that would be a good move. But a lot can go wrong in the next 2 to 3 years, and the chances of this company reaching profitability is probably quite slim. And I think the market is skeptical. If the market wasn't skeptical, I think the share price would have been up 10%, not down 10%. So let's have a look at the chart. Is this a company I would even be thinking about investing in right now? And I did have a look at the chart for this company recently, and the answer to that was no. Nope, nope, nope. Now, share price could be in a start of consolidation phase. That could be an absolute truth. We saw the share price reach a bottom back in January of this year, and there was some good volume coming in just after that. So that could be the limit, the floor in the share price. There it is. I just put a line there where the floor might be, around there. I might just lift it up there. We saw a nice little bounce in the share price on the 25th of June. So yeah, maybe. But what's the market cap of this company? I'd say 20 million. Well, according to this, 15.4 million, maybe 14 million after today. So that's coming in number 5. We have a company called Harvest Technology. The reason I'm going through this process is I want to share ideas with you. I'm also looking at companies that might be breaking out. And I thought maybe this could be an announcement where the share price of a company could break out, but alas, no. Biome. Quite a few companies in this space are doing fairly well. Oh, I thought the share price might be a little bit higher. And we have gone past 4 p.m. So we're in the closing auction. So we're seeing indicated prices everywhere. I thought the share price might be a little bit higher. This company, I do like their marketing strategy. They are continually sending out announcements about how they're performing. So we had Biome achieves record sales revenue in financial year 24 on the 1st of July. Biome expects to exceed financial year 24 forecast, 12th of June. A market update on the 29th of May. Their Appendix 4C on the 11th of April. An investor presentation on 11th of April. I thought they were actually issuing more frequent updates. First quarter of positive underlying cash flow on the 2nd of April. So within about 3 months, they've released 3 separate trading updates, and they've all been positive. Now, this is a company that did break out, and there is a beautiful uptrend. But to be honest with you, nothing overly new in this, apart from one thing. I did like, and this nice growth in revenue. So 80% growth in financial year 24 revenue from the previous corresponding period, 82% second half growth, and 88% fourth quarter growth. So potentially revenue is accelerating. So revenue, this is the most important bit, revenue did exceed their upgraded forecast. And that's why I thought maybe the market would be a little bit more excited. But I think the reason why the market hasn't been that excited is because the market expected this. The market expected the company to exceed their forecasts. And the company will report its 3rd consecutive quarter of positive cash flow and 2nd consecutive quarter of positive EBITDA. Now, I just noticed there was a nice little comment from Dredge Zen 01. Timing is key. You have to watch the financials to get the timing right. If you can buy a small cap and predict that it's going to report a net income for the first time on its next report, you generally get the best returns. Using this method, I'm up 55% in 7 months. And I'm wondering if Dredge Zen has taken a position in Biome, because this is sort of the path this company is going, although he did say predict. Anyway, so this is the chart of Biome. It's a beautiful looking chart. And the share price, based off my system, broke out around, we'll say July, this area here, I did a video on this company just before it broke out. I wish I was following this company a little bit more closely. I could have bought some shares at 10 cents. Share price of this company is now 60 cents. It's a six bagger over a short period of time. Probably wouldn't buy it now. The reason I wouldn't buy it now is the share price is well away from the short term moving average channel, or you might say the 25, 50-day moving averages. And I would expect a pullback eventually. Although when you go back here, back in December, the share price kept on running and eventually pulled back in January. So you just should know when the pullback will happen. Share price could continue going higher from here. And another thing to notice is the volume. A really good volume coming in. In fact, consistent, really good volume over the past 2 weeks as the share price has taken off. That's another good sign. And just compare that volume to the volume back in June, July last year. Very low volume, comparatively speaking. So volume is key. Some people don't believe that, but volume is key. It tells you a lot about what is driving the share price higher. And one of the best ways to drive the share price higher is to get fund managers interested. And that could be a sign with Biome that there are a few fund managers getting interested in this company and they're taking positions. So that can be a reason why the volume is expanding and the share price expanding. And also the company's performing quite well. So that's coming in number 4, we have Bio. Now on to a few companies I don't know a lot about, although I do know about Wellard coming in number 3. Share price up 117.65%, 3.7 cents. This is an agricultural company. They do live exporting of cattle, that sort of thing. That's the only thing I know they do. And the reason I know that I don't really care about these sort of companies. I'll put it that way, it's an agricultural company. And this company has been, I wouldn't say disaster, but it has been a very bad performer. And the whole reason share price is up is because they're selling one of their vehicles, their spit boats that transport live cattle. I think it transports live cattle to sell, selling for 18.1 million Australian dollars. And yeah, is selling its oldest livestock vessel. So I'm pretty sure this would be transporting livestock overseas. Now, they also mentioned, which is pretty important, they intend to return the majority of the net sales proceeds to shareholders. So it's a lot of cash, 18.1 million, for a company that had a market cap. If we have a look at the chart, and the chart's pretty ugly, by the way. Even with the share price running up today, share price is ugly. Well, chart's ugly. And the share price was this level back in May. So just over a month and a half ago, the share price was actually higher than this. So even though the share price is up over 100%, just look at the chart. It's an ugly chart. And according to TradingView, which has not taken the increase in share price today, the market cap of this company was $9 million. Now it's $18 million. It should be about $18 million. We can confirm that by looking at, should be about $20 million in fact. We confirm that through market index. Yep, 19.66 million. So don't forget that they're getting $18 million just on the sale of this vessel. And they're returning most of that to shareholders. So why the share price has run up today is simply because of that. Because people are thinking, oh, I can buy this company, and get most of that money I've just invested in this company back through this capital return. I don't like that strategy. That's another reason why I don't like this company. They just think, well, I'm going to sell this vessel and then give it all back to my shareholders. I like companies and companies management who think growth. They receive this money and think, how can we grow? All comes back to capital allocation. And the management of this company think that you can do better with this money than they can. And possibly they are right. I prefer management who thinks they can do a better job than shareholders with that money. That's exactly why Berkshire Hathaway, Warren Buffett's company, don't give dividends to the shareholders, because they believe, rightfully so, they can do better, get better returns for that money than the shareholders can. That's the simple reason they don't give dividends back to the shareholders. And they've been absolutely right over the past 50 years or so. Anyway, that's Wellard. Chart looks pretty ugly, even with the share price popping up today. In fact, if you look at the weekly chart, it's been an absolute disaster. Share price of this company back in 2016 was as high as $1.40. Share price of this company now is 3.7 cents. Yep. But it's up to 117%. So hopefully someone has profited from that, bought some shares the other day, and is up big now. And coming in number one and number two are two companies I've never heard of before. And we'll look at a company called Lindian Resources. Share price up 47.62% on the back of announcement titled Outstanding Gangan Kund Stage 1 Feasibility Study Results. Okay, so we're at that stage for this company. Don't even know what they mined. Here goes rare earths. They tell me straight below that at a few of their other announcements. Gangan Kund Rare Earths Project Update. So not many rare earths producers out there. Lynas is one. I can't even tell you anymore. Lynas is one, and China has all the rest. Something like that. Anyway. In fact, let's do that right now. Rare earths producers. There's Lynas Rare Earth and a company called Northern Minerals, Australia, China. Who's the major producer of rare earths? It's either China or Lynas. China, there we go. And it says China is the world's largest producer of rare earths by a large margin. It's not wrong. Which companies mine rare earths? Oh, Luke. No, I thought Luca was Mineral Sands. Not going to be wrong. Market Index has a list of rare earth companies, and by market cap, we have Lynas. There's Iluka, so maybe Iluka is also. Let's have a look. I'm going to open up Iluka. I always thought this was Mineral Sands. International Critical Minerals Company, producer of zircon, high-grade titanium feedstocks, rutile. That's Mineral Sands. I'm pretty sure all that's Mineral Sands. Yeah, zircons, rutile, and synthetic rutile. I'm pretty sure that's all. I'm going to look at their website. Oh, I'm going on a bit of a tangent here. Rare earths. Oh, there we go. Rare earth products. Maybe they're not in production. Luca holds a rare earth minerals to processing minerals. Oh, Luca is currently constructing a rare earth refinery, so they don't think they're in production just yet. Anyway, so back to what I was talking about. Get rid of Wellard and talking about the company called Lindian Resources. They do have a rare earth project and have done a feasibility study, and they're just talking about the numbers. I like these sort of numbers, these sort of announcements, because they have numbers. I love numbers. So stage 1, post-tax NPV of 831 million Australian dollars, an IRR, internal rate of return, of 80%, and an average annual EBITDA of $124.5 million. Pre-production capital cost of $60 million, which includes 12.5% contingency, making one of the lowest capital cost rare earth projects under development. A payback period of less than 2 years, and a post-tax NPV to capex ratio of more than 10-1. I do like this announcement. I'll be saying that. So I can definitely understand why the share price has gone on a run. Now, when I say I like this announcement, it's just based off what I've read there. And in the highlights section, the company should always, I shouldn't say oversell, but they should always market the announcement. So you probably do have to dig a little bit deeper. I did understand why, I heard the other day why a company called Immutep share price fell on what seemed like good results, because they didn't include something in those results when other companies usually do. And that's why the share price fell. I had no idea until I read that comment. So I think you do have to know what you have to be looking for in these types of feasibility studies. But based off the market reaction, share price up 47.62%, the market likes it. So the next thing I want to do is just have a look at the chart. Is this a breakout? Should we be getting excited about this company that I've never heard of before, Lindian Resources? And the answer to that is, well, that's the weekly chart. And the answer to that at this point in time is probably no for me, based off what I look for. So the share price was in a downtrend before this announcement. Now, this is one good one-day candlestick, nice little bullish. There's been enough buying today to suppress the selling from forcing share price down. The reason I say that is because there is a resistance because all these shareholders bought at higher prices. And they are probably putting their shares on the market but there's been enough demand to buy those shares that have been placed on market. So the share price hasn't collapsed. That's actually a good sign moving forward. What I probably want to do with Lindian Resources is just see how the share price reacts over the next few days. This could be just one off, and maybe the next few days the share price will fall. Yeah. So what I'm going to do is I'm going to put this company onto my high volume spec. Now I'm going to put this into my Bye Bye Australia, just to see how the market reacts over the next few days. But at this point in time, this particular action today, share price and volume action today, has been triggered, but definitely not a breakout. Not what I'm looking for, even though I do like the announcement. So that's coming in number 2, a company I've never heard of before, Lindian Resources. What's the market cap of this company, by the way? I didn't actually have a look at that. LIN. I'm assuming it's fairly, it's 178.7 million. Oh yeah, there you go. So it's not a small company. It just shows you, even though this is not a small company, I've never heard of before. Its main reason behind that, it's a mining exploring company. I'm assuming it's mining exploring. And if you don't know what I like to do, particularly this time of year, is just have a look at their cash flow report. In fact, all you have to do is open up the activities report and you can see straight away if it's an exploring or producing company, because if they're a producing company, they have production straight away. So in this particular report, they've just gone straight to their rare earths project in Malawi. Malawi, that's a fairly poor country. I would assume Malawi would be among the poorest countries, I want to say countries in the world. And you just say phase 3 dual program, Malawi. I'm saying top 5 poorest countries in the world. In fact, instead of doing, so Democratic South Sudan, DRC, Malawi. Let's have a look. How do we do this? Poorest countries in the world, Global Finance Magazine, Yemen. Oh, I forgot Yemen, Madagascar, Liberia. Yep, there's Malawi. It's number 7. Nigeria, yep, Mozambique, DRC, Central African Republic, Burundi, South Sudan. I knew South Sudan would come in number 1. I forgot about Burundi. And they're all in the same area, aren't they? Burundi is just to the south of South Sudan. Central African Republic is just to the west. Democratic Republic is around that area. They're all in the same area. Mozambique is a little bit further south, southeast. Nigeria is a little bit to the west. Malawi is just north of Mozambique. Oh, I think I have. And Liberia is along the coasts. Madagascar, we know that is. And Yemen is, in fact, in Asia. Africa, I'm on a tangent here. I want to make sure I got all those. Yep. There's South Sudan. Burundi's just down here. There it is. DRC, Central African Republic. They're all in the same spot. Malawi is down there. There's Madagascar, Mozambique. Liberia is just there. And what else was there? Surprised Djibouti's not there. I always thought Djibouti was really poor. And there's Nigeria. Oh, that's right. Nigeria is just north of Nigeria, which makes sense, yeah. Anyway, another tangent and a geographical region. But Malawi's poor, but doesn't mean it can't be a good place to mine. Maybe Lindian Resources would be very beneficial for the people of Malawi. I have no idea. All right, coming in number 1, a company with 2 numbers in their ticker code, which means it's a fairly new company on the ASX. Not many companies have 2 numbers in the ticker code. IA8 or Infini Resources, and they released an announcement which caused the share price to rally 119%. Stunning high-grade uranium soil results at Portland Creek. This is another indication that uranium is becoming quite popular. We're seeing less and less lithium announcements and lithium companies list, and we're seeing more and more uranium companies and announcements list. When lithium announcements gets to a really low point, that's the time to get excited about lithium. But uranium is all the rage, even though uranium prices are going sideways right now. But anyway, I opened up this and went straight away, I have no idea how to read uranium results. No idea. I've never looked at uranium results before. But apparently these are stunning. Extraordinarily high soil uranium by their first paragraph here. suppose we can trust them. But in this sort of instance, I just like to see how the market's reacted. And of course, share price is up 119%. It has been as high as almost 140% early in the day. But yeah, the initial reaction was quite well. Share price got to a low of 25.5 cents. So that has been buying during the day. So the most important thing about this company is the chart. So this company, I don't think has been listed all that long. Let's have a look. Yeah. So actually listed on the 15th of January. This is a 2024 company, which is interesting. Let's have a look. So this is a list of upcoming IPOs. I actually have or was looking at this because I didn't want to see what companies listed after Guzman y Gomez, because I know there was a company, and that company was called Alpha Apps. There's Infinity Resources, one of the only companies to list on the ASX this year. I do know a few of these companies now. Guzman y Gomez. I keep hearing about TASME, so should do some research on that. Blink Lab, Metals Acquisitions done well as well. Now, so this is a newly listed company on the ASX, but let's go back to the chart. Share price has collapsed since the IPO. If the share price is still lower than the high point during that first day of trading. So I wouldn't necessarily call this a breakout, but it's one of those instances where I like to put this on a watch list. And I wouldn't be surprised to see the share price drop back down to the 20-cent range as selling comes in. May not come in. This could be a breakout, actually a real breakout for the company, but I am dubious. Okay, so that's the top 5 announcements of the day. Other than that, fairly boring. I do want to talk about one company. I completely forgot about this company. Company called AML3D. Share price flat. Share price of this company rallied quite a bit last week on a recommendation from, was it Next Investors? And they did receive a price and volume query from the ASX. And I knew exactly what I'm going to say. Our company was recommended by this brokering, I don't know what they're called, but I got some information from this that I didn't realize. And I don't know if I like this much at all. Actually, I shouldn't say that. I know I don't like this. Okay, and this is what they said, because question one is always, do you have information, price sensitive information that you have in-house that have yet to release to the market that could explain why the share price has run up? And most of the time, not always, but most of the time, a company will say no to that. And then if they say no to that, question 2 is not applicable. And question 3 is asking the company's management, is there any other explanation that could explain or reason that could explain why the share price has rallied? And a lot of times you'll get a good answer. You'll get some information within question 3. And they did give some information in question 3. Here is what they said, and this is why I don't like it. The company is aware of an article, not a recommendation, nice use of wording, interesting use of wording, published yesterday by Next Investors, titled AML3D, Our Tech Pick of the Year for 2024. The company confirms that it has a paid commercial relationship. That's the most important thing. A paid commercial relationship for investor relations services with Next Investors to prepare investor material such as this article and to promote the company. I think that is terrible that Next Investors is promoting these companies and getting money to promote these companies, because I have noticed quite often over the last few years, after getting emails from Next Investors, that they do promote the same company after and after again. And they keep saying, look how well this company's done after we promoted them. And I don't know if I like that at all. And it probably makes sense now why I get these emails, because they don't rely on people investing or putting money or subscribing to their service. They get money from the company to promote the company. So interesting response here from AML3D. They probably had to disclose that, I suppose. But yeah, I don't. I'm going to keep. What's the ticker code? AL3. I'm going to not unsubscribe to the email, because if this happens again, it puts a bit more light on why the share price is rallying. They're not recommending the company because they like it. They're recommending the company because they're getting paid to recommend the company. And this is what happened to the share price when they released that email. The share price has gone on a massive rally. It's gone from like 7 cents to almost 10 cents on massive volume. This email and this next investors are quite popular, but I'm not sure if people realize they're getting paid to recommend these companies. Anyway, that's AL3. And the other one was LNAS. So I was wondering why this share price of this company or this ETF fell is because they went ex-dividend. They had a massive dividend. It's like over 10% dividend yield, $126, not 126 cents. And the share price fell by more than that, fell by $2.26, down 18% because it was a very large distribution, not dividend. Anyway, let's have a look at some charts. And this seems to be the time of year where ETFs are distributing money back to their shareholders. Let's have a look at a few charts, starting with Actinogen, and the share price keeps on running. I would say, and the share price has broken out according to this massive volume. I would want to see a pullback, but we saw this again. Look what happened back in February. The share price of this company went on a run over about a 5-day period, and the share price pulled back. I would say that's going to happen again. I would say definitely there's a chance it's going to happen again. So I would probably definitely not be buying Actinogen right now because I expect a pullback. Company called Optiscan, not Oilscan, Optiscan, a beautiful looking chart. The company also released an investor presentation today, some sort of presentation, I think. Yeah, roadshow presentation. So this company is interesting, but one thing I didn't like about this announcement or this presentation, it tells you a lot about the company. Here we go. Well, you can just look at the about section, but here we go. A global medical technology company leading the transformation of digital pathology and precision surgery. Anyway, so Optican has developed cutting-edge technology, blah, 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 just dramatically improving medical outcomes. So the main thing I was looking for here is any questions about whether or not they're selling any products right now, because I did sort of read somewhere where they are. Yes, I thought they were selling stuff. Wasn't sure. And then they talk about a market opportunity, going through all these different and then financials. So I was getting to this point. I was like, oh, financials. We get some information when it comes to financials. No, that's it. There's nothing. There's nothing. There's no financials at all. No financials, straight to experience leadership. So the one thing I was looking for in regards to this company is just not there. But anyway, the market likes this company right now. Chart looks absolutely brilliant. The company share price has had 2 pullbacks since it broke out. Pullbacks were probably over a 3-day period, and then the share price took off again. So 2 pullbacks, whether that's going to happen again, who knows? I don't know. So that's Optiscan, Oilscan. Guzmán y Gomez, well, there's no point looking at the chart for this company because it's only been trading for a few days, but 2 big down days in a row, and the share price now below $25. Ooh, below $25. Time to buy some shares in Guzmán y Gomez. I don't have to do that because it's now 4:30, which means TradingView is up to date. SKS Technologies. A beautiful looking chart. Another beautiful looking chart. I was looking at this company to take in a position on the pullback here around about or just above 70 cents. And now I'm wishing I did because there was a beautiful pullback. Beautiful pullback for SKS Technologies. MMI, Metro Mining. This is bauxite. And their facilities or their mine is just north of Weipa in northern Queensland. Oh, and look at that. Share price up 14.9% today. Another good looking chart, isn't it? Beautiful looking chart. And the breakout. Breakout was in December, late December at 2 cents. So share price has almost tripled. In fact, I wouldn't say that's a breakout. I would have said the breakout would have been a little bit later than that. Probably around about 2.4 cents in February. That was a breakout for this company. But the volume has increased. Yeah, the volume has increased. So there's more interest in this company right now. And you can see that interest just in the volume and the share price action. Strike Energy. I have a feeling this is a bad looking chart. Oh, share price went on a run. But still, the chart looks pretty bad. And share price has pulled back today. So that's what I'm going to talk about when it comes to Strike Energy. and Botanics. I have been looking for a pullback in this company, and possibly we have seen that. So now the share price is at the short-term moving average channel. And every single time we see the share price gets into this area, that's the time to buy. Look at that little pullback here. Not much of a pullback. Share price got into the short-term moving average channel, and then share price took off. Now we've seen the pullback. So big volume has come in today there, however. So that could be a little bit of concern. But that's Botanix Pharmaceuticals. Anyway, that's all I got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.